So there's two structures that I think you should always avoid. And this is what I say to my clients. There are two business structures I always tell them to stay away from at all costs, because like the pretty lizards, they make really lousy business structures, and they can easily destroy everything you work so hard. Those business structures, can anybody guess? The first is the sole proprietorship, and the second is the general partnership. Because again, even though they're the easiest, cheapest, and have the fewest formalities of any of the other structures, they're the ones that can end up being the most costly and lethal for several reasons. First, both you and your partner, if you have one, have unlimited liability for the business and any debts or liabilities it takes on, right? So you could lose everything you own if your business gets sued or can't pay the bills. Second, your business can be taken from you and liquidated to pay your personal debts or those of your business partner, even if the debts have nothing to do with the business, right? So if your business partner gets sued and you're in a general partnership because somebody fell off the balcony at his house at a party, and they sue him and he doesn't personally have enough to cover the cost, maybe he didn't have enough insurance or whatever, the rest of that money is going to come out of your business because there's no separation between the business and the partners. Third, wealth is created in part by how much of your money you get to keep and invest, right? And so with these two structures, you keep less of it than with any other business structure available to you, including the self-employment tax we talked about and getting fewer tax advantages. Plus, you're more likely to get audited, especially if you have a home-based business. If you're a sole proprietor and you're running a home-based business and you start taking tax advantages and deductions and things like that, you're much more likely to get audited. Fourth, it can be a lot harder to sell your business and negotiate a fair price or pass it on to future generations because there's no separation between you and that business entity. So for all these reasons, sole proprietorship and general partnerships can really end up being the most expensive way to go in the long run, right? So I try to stay away from those two. Some people will start out as one or the other because of financial considerations. If you're there, I would say as soon as you can, get to a formal business structure, and hopefully before anything happens, because if you wait till after something happens, it's kind of too late. So what are the pros and cons of each? All of the structures we'll be talking about next are considered the good structures. And like the lizards we spoke about earlier, they can be perfect for the right business at the right time in the life of that business, right? All of these structures will require estate filing of some sort, some more complicated than others, and they all offer some form of asset protection by placing limits on the amount of personal liability you can be subjected to. In addition, because they're separate entities from the owner, they can be sold, traded, and passed on easier. So what are the pros and cons of each of these? That's what we're going to talk about next. Limited partnerships allow you to predefine your role in the business and the amount of liability you're subject to. The general partner has all the control and all the risk. So if you want to invest in the business, you don't want to be involved in the day-to-day activities. You just want to, be able to get some money back for it, but not have to be involved and not be at a greater risk. You want to be a limited partner. If you're going to be doing all of the day-to-day activities or be involved, you're the general partner and you have all the control. You also have all the risk. Before the LLC, a lot of real estate companies used limited partnerships with S Corp as the general partner. They had people that could invest the money and they would be limited partners. Corporations also allow you to avoid liability for the business as long as you maintain the corporate structure, right? The formalities, keeping records, doing your annual minutes, doing your board meetings, doing your shareholders meetings. Those things are part of the formalities that you have to be able to do in order to maintain the corporation. As long as you do that, it gives you the largest number of tax advantages, eliminates the need to pay self-employment taxes, and it also gives you complete asset protection in terms of people being able to sue you for the losses of your business. It's not bulletproof as some people may believe, because if you don't do the corporate formalities, if you don't keep separate business and personal accounts and such, you could end up having the corporate veil pierced, where someone can show that you were just using it as a personal shield, and in that instance you would lose the asset protection, and they would be able to reach you past the corporation. S corporations, this is the hybrid, this is the original hybrid between the partnership and the corporation. So by filing a Chapter S election with the IRS, you get to take on the asset protection of a corporation, but treat the company income like a partnership or sole proprietorship, where you're taking the loss and deductions against your personal income. And like I said earlier, you only have to pay self-employment tax on the amount you pay yourself as a salary, and the rest gets treated as ordinary income. Limited liability companies and limited liability partnerships. These are the new guys on the block, and they have some really cool features. So for instance, you get the asset protection of a corporation, and you get to choose how you'll be taxed. So you can choose to be taxed as a corporation, as an S corp, as a partnership, or as a sole proprietor. And they're really flexible in terms of how they're set up, how profits can be divided, how ownership can be allocated. There's a lot of flexibility without the actual legal requirements of a corporation in terms of bylaws and minutes, shareholders meetings and directors meetings. So there's a lot of flexibility there, and there's a lot of great features, and because of it they are becoming very popular. The downside of the LLCs are basically that they haven't been around for a long time. There's still not a lot of case law in place. So court decisions, while they started out very favorable, have been very inconsistent and kind of all over the place when it comes to determining the outcome of legal disputes involving these types of business entities. And so that's the real downside of it. Factors for deciding what's best for you. Usually when someone asks me what's the best business structure for them, I have to say it depends, right? Because it really depends upon a lot of variables involved in choosing the right business structure. And so it takes a little time talking with your client and maybe their accountant to figure out what will really work best for them. So one of the first things I want to know is, what are your risk factors? And that's a two-part question. How much do you have to lose, and how risky is your business venture? Let's think about that. How much do you have to lose? Do you have a home, a vacation house, a couple of cars, savings, a college fund for the kids, so on like that, right? If you do, you're going to want to have as much asset protection as you can get, right? On the other hand, if you don't have anything, right, if you're living in your best friend's car, then you're not as worried about what people can take from you. You don't have anything. The risk factor is considerably lower for you. Second part of that question is, how risky is your business venture? If your business is knitting lace dollies for people's dining room table, you have a lot less risk, right, than say a home improvement contractor or a lawn care specialist with 3 full-time employees. So depending on which one of those businesses that you're dealing with, you're going to need more or less asset protection. If you are knitting dollies in your home that you then ship out to people's homes, right, your liability is not that high. Depending on the materials you use, it's less likely that you're going to get sued for something than if you're on somebody's property repairing the roof, because then there's more risk that something could go wrong. And you want to take those kinds of issues under consideration as you're trying to determine what is the best business structure for you.